Hi, I'm PNC Joe, and I only talk about commercial insurance. Running a small business comes with many responsibilities, and navigating the complex world of employee management can be particularly challenging. Employment Practices Liability Insurance, EPLI, is crucial because it addresses potential legal risks like discrimination, wrongful termination, and harassment claims. The intricate nature of employment laws means that even well-intentioned businesses can find themselves facing costly legal battles, highlighting the need for understanding and preparation in this area. Keep watching, because in this video we will discuss these important topics. What does employment practices liability insurance cover? How does a claims-made policy work? What is a retroactive date in EPLI? What are common exclusions in EPLI policies? How are defense costs handled in EPLI? Does EPLI cover claims made by third parties? Are independent contractors covered under EPLI? What can employers do to reduce EPLI claims? And a bonus topic at the end. Let's go through these points one at a time. Employment Practices Liability Insurance, often called EPLI, is a type of insurance that helps protect businesses against claims made by employees. These claims might be about things like being fired without a good reason, wrongful termination, being treated differently because of who they are, discrimination, or being harassed at work, sexual harassment. EPLI also covers claims like retaliation, which happens when an employee is punished for speaking up about something wrong. Other areas it covers include defamation, when false things are said about someone, invasion of privacy, when someone's personal space or information is not respected, failure to promote, when an employee is unfairly passed over for a promotion, and negligent evaluation, when an employee is reviewed unfairly. Most EPLI policies are claims-made policies. This means the insurance only covers claims made while the policy is active. If a claim is made after the policy ends, it won't be covered, even if the event happened while the policy was active. This is different from an occurrence policy, which covers claims based on when the event happened, not when the claim was made. For example, if an employee complains about something that happened in 2022, but files the claim in 2023, when the policy is no longer active, a claims-made policy won't cover it. A retroactive date is a date set in the insurance policy that helps determine what events the policy will cover. Events that happen before this date are not covered, even if the claim is made while the policy is active. So if your EPLI policy has a retroactive date of January 1st, 2021, and something happened on December 30th, 2020, your policy won't cover it. Having a retroactive date is important because it helps insurance companies manage risk by not covering too many old claims. Exclusions are specific situations or events that an insurance policy does not cover. In EPLI, common exclusions might include criminal acts, which are illegal activities, or claims that involve workers' compensation, which is a separate type of insurance. Claims involving intentional wrongdoing, where someone did something bad on purpose, may also be excluded. Understanding exclusions is important because it helps you know what your policy will and will not cover. Defense costs are the expenses needed to defend a company against a claim, like hiring a lawyer. In EPLI, these costs can be included within the policy limits or outside of them. If they are included, the money spent on defense reduces the total amount available to pay for a claim. For example, if your policy covers up to $1 million and you spend $200,000 on defense, only $800,000 would be left to pay for the claim. If defense costs are outside the policy limits, they won't reduce the amount available for the claim. Third-party coverage in EPLI refers to protection against claims made by people who are not employees, like customers or vendors. Some EPLI policies offer this coverage, but it's not always included. For example, if a customer claims they were harassed by an employee, third-party coverage would help with that claim. It's important to check if your EPLI policy includes third-party coverage if you interact with people outside your company. Independent contractors are people who work for a company but are not regular employees. Whether they are covered under EPLI depends on the policy. Some policies include independent contractors, while others do not. If your business uses independent contractors, it's important to check your policy to see if they are covered. This way, you know if you're protected against claims they might make. Employers can take several steps to reduce the chances of having EPLI claims. First, they can create clear policies and rules about behavior at work, like having a zero-tolerance policy for harassment. Training employees and managers on these policies can help everyone understand what's expected. Keeping good records of employee performance and any issues that arise can also help if a claim is made. Finally, having a way for employees to report problems without fear of retaliation can help address issues early and prevent claims. A policy limit is the maximum amount of money an insurance policy will pay for a covered claim. In EPLI, this means if your policy limit is $500,000, that's the most the insurance company will pay for a claim. If the claim costs more, the business would have to pay the extra amount. It's important to choose a policy limit that matches the size and needs of your business to ensure you're adequately protected. A deductible is the amount of money the insured business has to pay before the insurance company starts paying for a claim. In EPLI, this means if your deductible is $10,000, you have to pay the first $10,000 of any claim yourself. After that, the insurance will cover the rest up to the policy limit. Choosing the right deductible is important because a higher deductible usually means lower insurance premiums, but it also means more risk for the business. I hope this overview has helped clarify the many facets of employment practices liability insurance, emphasizing its importance in protecting your business from potential workplace claims. Understanding EPLI can empower you to proactively mitigate legal risks and foster a safer, more inclusive work environment. As you navigate the complexities of employee management, remember that being well-informed and prepared is your best defense. If you have any questions or ideas for future videos, please let me know in the comments below.